I'm Alan Kenny, Editorial Director with REIT.com, and I'm at REITWorld 2014, NAREIT's annual convention for all things REIT in Atlanta at the Marriott Marquis Hotel. Joining me is Jeff Horowitz, Global Head of Real Estate, Gaming, and Lodging at Bank of America Merrill Lynch. So, Jeff, let's just start off with an easy one here. 2014, have you been surprised by the overall level of capital market activity for REITs?
You know, Alan, no, I would say not. The reality is that in a year like this, we've had about $55 billion of issuance, so $25 billion in equity, a couple of billion in preferred, and the remainder in unsecured debt. Last year, we had about $70 billion in total. If you think about the backdrop, we've had low interest rates, very positive for our companies, some yield, again positive. We've had greater volatility in other yield products, like MLPs, which I think has helped us. And most importantly, we've had strong underlying growth and fundamentals in our clients. And so when our clients have good growth and their stocks trade around NAV, they tend to try to finance things that are long in an interest rate environment like we have, and they'll raise equity. So I think we've had a pretty good backdrop and I think a pretty good year.
Let's talk IPOs. Last year there were 19 in the REIT space. 2014 to the end of September there have been 3. Can you give us an idea of what's going on there?
Sure. So if you look at any historic context, you'll find that over the last 20 years, there's been 4 or 5 periods when there's been, many more IPOs than in others. So last year was one of those years. Usually there's a few precursors for that. So in last year's case, there were a number of companies that went public or went private in 06 and 07. They came public last year. So the sponsors took a number of companies out. 2, there were a few new sectors that developed. So think about things like single-family homes, again, a number of IPOs. And so as we look at this year, first of all, there's been a lot less activity in the beginning half of the year, but you'll see more as we kind of go into the finale of the year. So it'll be a little back-ended. The second thing I'd say, though, is that a lot of companies that have wanted to go public have gone public. And a lot of people who were thinking about it also refinanced their portfolios given the interest rate environment. So as we look forward, I think that you'll see that we're in a normalized environment, and I think a healthy one, with just the bar being a little bit higher.
So 2015, will we see more IPOs then?
2015, I think, will be a very normalized year. There'll be a handful of deals. There are a handful of things in the woodworks right now, and I think that those will come out. The reality is the market is wide open for the companies as long as they exhibit the basic qualities that are important for IPOs. They have to have a good management team. They have to have a good business plan. They have to have some scale and liquidity. And again, the bar is higher now than it used to be given the quality and number of companies we have in existence already.
All right, well, thank you so much for your time, Jeff.
Thank you so much. My pleasure.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.